From Creamer Media in Johannesburg, this is the Real Economy Report. While South African natural gas and helium producer Renergen has faced a series of challenges that have impacted on its operations and financial standing in recent months, the company has reiterated its commitment to delivering on promises made to shareholders. Simone Litka, who recently visited their Virginia gas project, tells us more.
While liquidity pressures, production setbacks, and environmental concerns had complicated the company's ability to meet its commitments, Renergen had been in ongoing communication with lenders and stakeholders.
First and foremost, from a liquidity perspective, we're in touch with and in regular contact with all of our lenders and stakeholders, and everyone is working mutually towards a plan on taking the business forward. And everyone is fully supportive and fully behind us. So from that perspective, management gains a lot of comfort from the process that's ongoing. But then further on from there, it's critical for us to achieve the completion of Phase 1C, which is well underway now in terms of planning and what we're going to do. And then from there, I mean, we've already secured the debt for Phase 2. We're well advanced on the process with the bidders. So from a process perspective, that side of it is also tracking nicely.
However, given a decline in the company's share price, Marani tells us how Renergen plans to restore investor confidence.
Delivery. That's the point. And right now we've gotten to the point where we've gotten the technical challenges behind us, and now it's just a case of getting more feed gas into the plant. And that's a function of drilling more wells. We simply don't have enough wells.
He further elaborates on delays and commitments to supplying helium.
You need a little bit of context on the whole concept of this 7-year helium delivery. The first instance when the contract was originally signed, the plan back then was predominantly focused around a CNG plant, compressed natural gas, and then helium separation. At the time, this was around 2016, 2017, mutually between ourselves and the off-taker, we'd gotten to the point where globally there was a paradigm shift in costs with regards to cryogenic separation. They'd come down significantly. And the reason that cryogenic costs had come down so significantly for micro-scale LNG projects was as a result of some policy changes in China that had seen China start mass producing micro LNG liquefiers. The result of that was that mutually we came to the conclusion that building a CNG plant with a helium plant was not going to be as attractive or feasible for either party as going the route of cryogenics. And so from that perspective, we halted that process, and that was where we went when we then embarked on the route of going for a larger project, which involved securing the debt from the DFC, going through a full design phase, going through the bidding process. So in terms of the actual delay, to say that it was 7 years is not accurate. It's not accurate at all, because there were no commitments for that period of time. The delay started, essentially, if you think about it, there was COVID. That caused the initial delay. Despite that, we did manage to claw back some time, but COVID caused the first delay. We then managed to get the LNG on time, and I think the LNG was, technically speaking, without COVID, probably only about 2 or 3 months overdue, which was excellent in the context of a normal construction. We then started with the LNG project, with the helium project. And the helium project, literally everything got thrown off track the minute that we had the leak in the cold box. Now, the leak in the cold box, we believe, had actually been there 6 months prior, but the OEM hadn't told us, and the OEM was trying to hide it. And that was why we then, towards the end of the contract, then did what was necessary in terms of pulling guarantees, making sure that we got the contractor off site. And as soon as we got the contractor off site, we managed to get control and get the plant stable much faster than the OEM was capable of doing. So from that perspective, very proud of the team. The team has done incredibly well in terms of bringing themselves up to speed. But the majority of the delays were as a result of, first, the leak, then kicking into touch a number of scenarios, which were just unfortunate.
COO Nick Mitchell, meanwhile, elaborates on some of the repeated setbacks in helium production and explains what steps have been taken to mitigate such supply chain vulnerabilities moving forward.
So maybe to first deal with the issues around the setbacks itself. Yes, we have faced several setbacks on the helium supply side and the actual production of it. The technical issues around the plant and the difficulties we were facing originally have now been resolved. We're in a position where we have stabilized the system. The system is producing liquid helium, albeit at a low production rate as a result of the amount of gas we're feeding into the system. That has a consequential knock-on in terms of the ability to fill and cool down an ISO container. The challenge with filling an ISO container requires the container to be cooled down to minus 269 degrees. And in order to get there, you need to overcome a lot of boil-off as you're bringing a container down from ambient temperature to minus 269 degrees. At the level of production, we're facing a significant amount of boil-off, and this is purely a physics issue. As we ramp up the plant to full production, it's anticipated that the production or the capability of filling those containers in terms of a time frame reduces exponentially. And that's what we're working towards as the significant process moving forward. Dealing with the immediate short-term issues, we are exploring several solutions around mitigations that could overcome. And as we define those more with our customer base, we will certainly advise the market and keep them abreast of those developments. But there are several possible solutions that we're working towards and exploring all of those in earnest.
That's Creamer Media's Real Economy Report. Join us again next week for more news and insights into South Africa's real economy. And don't forget to listen to the audio version of our Engineering News daily email newsletter.